to
Well, that'll cover you.
To cover me.
Right, I was going to say yes, right.
Yeah.
Okay. I would hope off the record, I would hope that a legitimate vendor, if they were overpaid, would have a, put a credit balance in our account.
Yeah.
Number 7, on the last day of the year, a truckload of beef was set aside for shipment but was not shipped. Because it was still on hand, the inventory was counted. The shipping document was dated the last day of the year, so it also was included as a current year sale. For Part A, adequate documents and records, independent checks on performance. So adequate documents and records, independent checks on performance for A. It's not Lena for B, sorry. It's really a cutoff issue. Transactions need to be recorded on the correct dates. Notice the double picking up here. I was going to say it's based on the terms of the sale if it's with FOB term, but here, one of the things we'll talk about when we talk about the inventory observation is that items that are going to be shipped out that day, if it's FOB shipping point, have to be segregated. Take a yellow police tape and separate them, so we're not going to count the inventory. We should record the sale. The inventory should not be counted.
So the transaction needs to be recorded on sales date?
Well, yeah, if it's FOB shipping point, the sale should be recorded, but don't count the inventory that's going to be shipped out that date, because there basically is a consummated sale. So you want to make sure that with the physical count of inventory, that any inventory that's going to be shipped out that day should not be counted, because it's no longer our inventory. That's why you want to separate that from the other inventory. Put it in the loading dock area and then kind of, rope it off or something so it's not counted.
Bill, I'm sorry, number 6, what was it, C?
6C, let me check that out. Oh, that was payment only on original invoice, and you had to have a receiving report number. But then Barry gave us information about as well on that. Remember, some actual real life scenario.
Yeah, with the beef. Okay, got it.
And finally, number 8, then we move on. Account payable clerk process payments to himself by adding a fictitious vendor address. Oh, here's the one problem. He's the account payable clerk who can authorize payment. He also has access to the approved vendor master file.
Separation of duties.
Separation of duties, yes. And Lena B?
Recorded transactions exist.
Very good. And obviously here, restrict the account payable clerk from being able to access the approved vendor master file. Well, the account payable clerk should not be able to make changes to the approved vendor file. Go ahead, Barry.
You're also assuming in that scenario that he's also going to be the one processing
the payment. That's true. That's true. What if he isn't?
If he isn't, then it's
probably okay.
Right.
That's an excellent point.
Yeah, because if he's not processing the checks, then
coordinate
he or
the
she,
physical count of inventory, and check it with the recording of sales.
Receipt?
Yeah, to make sure it hasn't been billed and that it hasn't been counted.
On chapter 23, I'll let you read a lot of the chapter on your own. I will talk about it briefly. I want to talk about a 20-year-old CPA question that they ask. Chapter 23. Now, this is the cash and bank. A lot of the cash area is actually audited via or through the sales and collection and the acquisition and payment cycle. Because sales and collection involve debits to cash, and acquisition and payments are credit to cash. So this is apart from that, and I put topics in the online discussion, if you recall back last week, I guess it would have been. Maybe someone can assist me here. Just a few areas I want to hit, and then just a broad overview of some chapter coverage. Then I'm going to pass on answer keys to chapter 12, and not going to say much about it, and then we'll go to the next chapter. Who can explain to me what the cutoff bank statement is? The cutoff bank statement.
It's a record of the transactions in accounts or balances in accounts that goes 1 to 2 weeks past the statement period.
Okay, I usually say 7 to 10 days.
Okay.
Well, okay, that's fine.
And so that you can take that and the auditor can take that and verify.
That's right.
it
Who
with
does that go directly to?
The auditor.
The auditor, that's right. That is correct. Yeah, it represents, usually in my experience, it's been 7 to 10 days transactions in the bank account after year end, and that goes directly to the auditor. Now, one thing that can do is to assist the fraud known as keeping the cash books open. How would we accomplish that? Now, let me explain what I mean by keeping the cash books open. A company wanted to improve their cash position. And so, let's say their calendar year. Sales on January 2nd, 3rd, and 4th are recorded as sales in the prior year. How could we detect that through the cutoff bank statement?
Well, you just see if they got paid.
AP, accounts payable.
Well, it'd be receivable for them, of course. See when that cash
Clear.
was entered into their bank account.
Mm-hmm.
For example, on a cash sale, if we make regular deposits, if you have a sale recorded on December 31st and a cash sale, but the cash doesn't show up in the bank account until January 4th, it sounds like we're keeping the cash books open because it never would take that long for that cash to be credited to that particular client's
So that's
bank
like it
account.
has to be recognized before it can be realized.
Yeah, you're looking at that discrepancy in the recording period.
So wait, again, according to accrual accounting, you have to recognize it when.
Before it can-
Well, that's at the time the sale's consummated, but this is for the recording of when the cash was received.
Okay.
Now, somebody went in here, and it might have been Amanda, and I'm not sure where she is, although I guess we were suspicious when she wasn't here at 12:30. Maybe I have an email from her, I'm not sure. But somebody talked, I have never done one, a proof of cash. I thought she was the one who posted that, but maybe it was someone else. Do we have anyone acknowledge who posted on the proof of cash? No one's acknowledging it if it was them. I could check it quickly here.
Maybe it was me, I don't know.
All right, okay. I've never done one, but a company that has poor internal controls for cash, what you normally do is you analyze in great depth 1 month's cash receipts and disbursements, basically doing a much more in-depth audit of that particular month, making sure that that month's cash transactions were properly recorded. I guess I didn't do it because I had a situation where the clients I was assigned to were clients that basically had very strong internal controls, very competent personnel, and so this wasn't a significant area that needed to be dealt with. I also had you do some, in this particular chapter, to talk about interbank transfers. What's the issue with interbank transfers? How could there be a fraud involved there?
For interbank transfer?
Interbank transfers.
If there's a transaction between one bank, but maybe you're recording the cash you record it on one side and not the other side.
Barry's exactly right. Right, we transfer cash from one bank account to the other. The bank account that got the cash, oh yes, we debit the cash account. But he's right, the bank that lost the cash, that account, we credit something else. We'll credit some other account rather than cash. So we're overstating our cash balance. So basically, any cash transfers between bank accounts around year end, we're going to examine in great depth to make sure proper bookkeeping was done. Now, we also showed, and they showed one in the text here, although I think it could have had a little more information, the standard bank confirmation form. There was one on page 740. What information is included in the standard bank confirmation form? Who does the standard bank confirmation form go to?
I think this was my,
Oh, okay, later.
I think this is mine, so I should know this. It goes directly to the auditor,
Yes.
because the auditor requests it, and then it includes...
And the client has to authorize it, don't forget, because
Yeah.
banks...
Right, because it can't just pass out information. Wait, was this week 4 or week 5 discussion? Week 4, right?
I think it was last week,
Yeah.
yes.
Okay, so let me see what I said. So it goes directly to the auditor, and then approved by the bank, and then... One second.
Well, what is included? It includes deposit information and all bank accounts that are maintained there. What else would it include?
Trying to find my post. Can't find it. I don't know.
Well, let me explain. And I want to expand a little of what's in the text here. It includes all the bank account information for all the banks, savings, checking accounts, any CDs, etc., associated with that bank. But it also includes any loans that are outstanding, what the interest rates are, when they're due, and that's shown in our text. But what they're not showing is what if there are restrictions. For example, there may be a bank loan where if the current ratio falls below 2 to 1, the loan is immediately due and payable. Or there may be, we mentioned some of this a little bit last week, there may be some restrictions on the payment of dividends until such time as
And the bank also...
loans are basically paid off. Or there may be some cash that has to be paid in some type of an escrow account that might be involved with this. So any terms associated with the loans with that banking institution that should require at least some type of footnote disclosure. And they have a much cleaner one here in the textbook, but that's something else I think that would be involved.
There's also a place where the bank gets to comment on any issues they're having.
Yes, exactly. And that's hopefully where they would talk about ratio restrictions or dividend limitations, something of that nature.
Would that just be loans with that bank then?
Yes, only with that particular banking institution. And that's why we have to send out confirmations for any of the banks that our particular client is dealing with. Now, I want to end up with the bank reconciliation, but two other areas here that I'll just mention in passing that were in the online discussion from last week. The audits associated with that impressed payroll account. Who can tell me what an impressed, I-M-P-R-E-S-T, what is an impressed account? Especially being in payroll. Anyone familiar with the term? Well, what it is it's an account where you put just the money needed for like that payroll. So when all the checks are clear,
It's at a zero balance.
it should have a zero balance, exactly. So it's a nice internal control to have as well. We also had some research in the online discussion relating to an area. I know it's not big, but that's petty cash. But again, there should be, and I think it might have been Barry on this one or something.
No, it was me again.
Oh, Elena again, oh my gosh. Basically give some rules, you can go back and look at that online discussion there.
Make sure there's only one person accountable for it.
Okay, keep going.
Keep logs, a careful log of the petty cash totals and who took it. The actual petty cash should be in a secure space that only the one person in charge of it can use. And then once the auditors count it, they add the value to any other assets in there, like stamps or negotiable instruments. They should total that, and then they use that every year if they're still with the client. Okay, that's
That
it.
was good, that was good. You know, I was kind of scoffing at first when we talked about stamps and postage, because, you know, they often said in textbooks, well, you use it if someone's got to buy stamps, take it out of the imprest account. And I thought that most companies have a postal meter.
Yeah, don't they now?
Well, here in the copy room on 7, we always had a postal meter. And I noticed the other day it was gone. So I talked to Amy Meehan about that, and she said, well, our lease on that expired, but I bought a lot of stamps. So I guess if she runs out of stamps, she can use the imprest account to go get more stamps. So
Don't bigger companies have like agreements with FedEx and stuff where they just...
I thought so. We always said, I just thought you just run it through the postal meter, but now that we don't, it's unless it's moved to a new location. She told me the lease expired, and that spot is still open now. The postal meter is not there, so whatever. But anyway, it's not a big amount, but at the same time, you know, should be aware of it. Now, the last thing I want to go over here is a problem that was on the CPA exam when it was still written. I just want to talk about it briefly. It deals with the audit of the bank reconciliation. Again, this was posted in the online discussion. But this is probably 20 years old now, something like that, because 20 years ago, remember, the exam was still on paper. It's not been on computer for that long, but I think it was at a time when calculators were allowed. In Bill's era, it was a paper exam and no calculators. But they gave you a bank reconciliation, and they identified certain items in the bank reconciliation, and they specified that you were supposed to indicate audit procedures that would be performed for each of the elements that were reflected. And I've got the model answer here because remember, when the exam was paper, several months after the exam was administered and the results had been issued, you could actually buy the answers for like $3.75. Now, of course, it's computerized. The answers are not accessible, and they want to reuse questions. By the way, at that time, and I'm not sure if this is still true, any CPA could contribute questions to the exam. You would send them to the examiner, and they would decide whether or not to use them. When I was at the Wharton School at Penn, intermediate accounting, one of the intermediate accounting instructors was notorious for being unduly challenging. The rumor always was that he had volunteered many questions to the CPA exam, but they were always rejected as being too difficult. Yet we would face every one of our intermediate accounting exams, all the intermediate accounting instructors would contribute one question. So we always knew that the Hartley question, the one that he contributed, just skip that one and take a 0 and try and do the others, because the other instructors would automatically figure that into their grading. Anyway, the first item was balance per bank. Balance per bank. And this CPA question suggested 2 audit procedures for that, for checking on balance per bank. First of all, the standard bank confirmation form, tracing that to the standard bank confirmation form.
Wait, what question are we on?
We're not on a question.
Oh, okay.
We're going from an old CPA question, okay, and we're putting down audit procedures, okay, for various components of a bank reconciliation. So this is Bill's adding something extra here. So audit procedures suggested by this 20-year-old CPA question. The first item they were asking about was the balance per bank. They said to confirm that with the standard bank confirmation form. Confirm it with the standard bank confirmation form.
What number are we on? I'm sorry.
We're not a question. This is not a homework problem.
Oh, okay, okay.
This is an old 20-year-old CPA question from the old written days. And then they said to trace the balance to the cutoff bank statement. So for balance per bank, basically trace it to the standard bank confirmation form, and also trace it to the cutoff bank statement. This would be a great question to have because it's pretty straightforward. The second item that they wanted you to come up with audit procedures was deposits in transit. Deposits in transit.
And these are not questions?
These were just, no, this is not a homework question. These were from that CPA question. They had like A through E.
Oh, okay.
And you had to identify the audit procedure. This would have been a great question for the CPA exam because you could have answered this. Hopefully they'll have something similar to that in today's type exam. For deposits in transit, they said, first of all, first procedure, verify the deposit was listed, verify the deposit was listed, and the cutoff bank statement on a timely basis. Verify the deposit was listed on the cutoff bank statement on a timely basis. That's meant to watch out for keeping the cash books open. Second item for that deposit in transit, trace to the cash receipts journal. Trace to the cash receipts journal. And they had a third item, inspect the client's copy of the deposit slip. Inspect the client's copy of the deposit slip for the date of deposit. Inspect the client's copy of the deposit slip for the date of the deposit. And that's the way they had those three procedures. Outstanding checks was the next item. They were asking about outstanding checks. First procedure for outstanding checks, trace to the cash disbursements journal. Trace to the cash disbursements journal. Second procedure for outstanding checks, examine supporting documents. Examine supporting documents for outstanding checks. For outstanding checks that were not returned. That were not returned with the cutoff bank statement. That were not returned with the cutoff bank statement. So examining supporting documents for those outstanding checks that were not returned with the cutoff bank statement. And the third one they had, examine checks accompanying the cutoff bank statement. Examine checks accompanying the cutoff bank statement and trace them to the outstanding check list. And so examine checks accompanying the cutoff bank statement and trace them to the outstanding check list. Item D, excuse me, I said the word E, it's F, it goes to F. Item D was an NSF check that was returned, an NSF check returned. Here, trace to the original deposit, trace to the original deposit, and see that the account receivable was re-entered. Trace to the original deposit and check that the account receivable was re-entered. Remember, as you recall from your accounting, when you have an NSF check, you basically reinstate the account receivable in credit cash. Item E, a note was collected, a customer note was collected by the bank. A customer note was collected by the bank. Here, a couple procedures. One, examine the bank credit memo. Examine the bank credit memo and the note. Examine the bank credit memo and the note.
Bill, what
Yes.
chapter are we on?
I was all chapter 23.
Oh, okay, 23. I went to the bathroom now. Okay.
No, this is all 23.
Okay.
And the other procedure for note collected was recompute interest income on the note and any bank fee. Recompute interest income on the note and any bank fee. And the last item on this old CPA question, item F, was balance per books. Balance per books. And they had us tracing that balance to the general ledger. Trace that balance to the general ledger and to the trial balance. And to the trial balance.
When auditing, do auditors ever find like mistakes in the bank?
Occasionally, but not that frequently.
And then they, I assume, get the bank to fix it, or is that the company's
Well,
job?
I think if I found that, I would contact the client
Mhm.
and have them contact the bank to make the correction.
Yeah, because they don't have any, the
Don't
auditor
know.
doesn't have any authorization.
That's exactly right. That's where you go back to the client. Okay, just a little bit on this one now. I assigned a few questions. I'd like help on one, though. 23-12. 23-12. I think this is the one that relates to kiting. Let me just check that out. Okay, yeah. Oh, distinguish between kiting and lapping. Well, I'll talk about lapping because that's in the chapter coverage for next week. But could someone tell me about kiting? What is kiting? Somebody posted that, I'm sure, because it was in the online discussion.
Fraud.
It's a, yeah, what type of fraud is it? Well, let me go over it. Kiting, which is a fraud, involves a check transferring funds from one bank to another that's deposited on the date drawn, but this is exactly what Barry talked about earlier, but is not recorded as a cash disbursement until the following period. That is why we have this schedule of interbank transfers. So that was part of kiting, and often involves that out-of-state or out-of-the-country bank as one of the banks.
Bill, for week 5, we're covering for the homework problems.
Oh, the homework problems, yes, let me comment for the,
Okay.
for putting the problems we went over today in chapter 10, anything in 23. We are not doing the chapter 12 because do not enter those because I've got a solution for you
Okay.
for all 12, so do not put that in the, into the Dropbox. And we'll probably get through those chapter 13 problems. And we'll see on for whatever we covered today, but starting with the chapter 10 ones that we did.
Okay, so chapter
And,
10.
yeah, 10, and whatever we do the rest of the day, but not 12 because I'm giving you
Right.
answer keys.
So 13.
Don't enter those.
Okay.
Exactly, exactly. And Amanda, did you hear that too?
Got it.
Okay. Kiting might be uncovered by preparing a schedule of interbank transfers that we talked about earlier. And again, by reviewing it's also said you can review the cutoff bank statement. Does anybody, I'll talk about lapping because that'll come up next week, but anyone familiar with lapping? Well, let me comment on it. I'll just talk about it briefly now. You'll read about it next week. Let's say that there aren't adequate separation of duties and responsibilities. A customer pays their account payable, our account receivable, and I temporarily borrow the funds in order, because I feel lucky, and I'm going to the Rivers Casino. By the way, I'm feeling lucky today for one reason. I have been to the Loop 3 days, and I have parked in the same exact parking place on level 4. What are the odds that that spot would be open? Because I've come at completely different times. Today, by the way, someone just backed out of that spot, so I grabbed it. Of course, there's a million places in the garage on Saturday anyway, but so I feel lucky. So I'm going to borrow the funds, and I intend to return them tomorrow, but I lose the money. So another customer that was a one-time customer makes payment of their receivable, so I take their payment and credit the first customer's account. So that customer shows their payment was made and their receivable has been satisfied. I then write off the one-time customer's payment as uncollectible, and now I'm even again. Maybe I even have some extra money left over. So that's the type of scheme it is. You borrow money initially by embezzling it, and then you take subsequent periods, like a pyramid scheme payments, and you then record those as payment for prior customers who satisfied their obligation. And you'll read more about it in the chapter on receivables, which is chapter 16. But I would like you to put something, you can get something more sophisticated than I just gave for kiting and lapping, and put that in the Dropbox too. So, something a little more sophisticated than what I gave you.
So you want us to also include
a little on lapping too, because that'll be an advanced preview. And lapping is going over into greater detail in that chapter 16.
So when we put something, what do you mean? Like, how do you want us to summarize it?
I want you to summarize what kiting is and how it could be detected, please, and lapping and how it could be detected.
It was 23-12, right?
That was 23 dash, let me check.
12?
I think it was 12.
What is?
23-12, yes, 23-12, yes.
So we're
so yeah, do that one with a little more sophistication than I just gave right at this time.
What is kiting and how do we detect it, right?
Yes, kiting and how we detect it, and also lapping and how we detect it. So that is kind of an advanced preview, but if you could cover both, that would be great.
Okay.
And let's see what else we want to do or not do. And for the Dropbox. Yes,
so we'll
for the
put that on
Dropbox.
that's going to be the only one for 23-12, right? That's what we're looking at?
Yes. Now, 22C says audit procedures for the bank reconciliation. You don't have to do that. We just took that down in the notes, remember. So that 22C we can skip. But I hope you did type what I went over from that old CPA question. Everyone input that? So you don't have to put it in the Dropbox.
Okay.
But you got it in your notes just
Yeah.
for, okay, for Amanda? Okay. Well, she can view the tape for that, right, the recording. Okay, that leaves only one more question in there, 23-24. Okay, and then this will be it in this chapter, then we'll move to the next one. This is on page 753. 753. This is a new problem for me that I never assigned. So, they give us 7 misstatements due to errors or fraud.
Sorry, which patient?
Page 753, 23-24. A new one for me, everyone. I've never used this problem before, so this will be virgin turf for me. Whereas a lot of the problems in here I remember from the past. So we're supposed to, maybe you can help me out here. We have 1 through 7 possible misstatements. Then we have A through H, which is more than 7. And we're supposed to indicate which of these audit procedures would be most effective in providing evidence regarding the misstatement. So this is what we used to call it. It's getting cold in here, isn't it? Yeah, I'm just feeling it now. I hadn't felt it till now. So this is like a matching question, isn't it?
Yeah.
A matching question. All right, we'll see if you can come up with the answers and impress me. Then we'll move to chapter 13. Okay. Flip my page here.
Yeah, it's on 2 separate pages of the ebook.
Yeah.
Oh, great. Yeah, I hate that. Jeez, naturally.
753 chapter.
Okay, well, the nice hard copy of Jones here, it's all on 1 page. All right. The auditor suspects that a lapping scheme exists because an accounting department employee who has access to cash receipts also maintains the account receivable ledger and never takes a vacation or sick day. Now, look down at A through H and see if you can come up with the procedure that they want. Some are obviously not the one because they talk about examine payroll checks, but it has nothing to do with payroll.
B?
Which did you say again?
B?
B is correct. Give credit there to Barry. B as in Barry for number 1. Very good. All right, let's do number 2. And so on the Dropbox, you just got to put 1B. All right. Yeah, okay. 2. The auditor suspects that the entity is inappropriately increasing the cash reported on its balance sheet by drawing a check on one account and not recording it as an outstanding check on that account. Oh, this is the bank transfer again. And simultaneously record it as a deposit in the second account. See if you can beat Barry to this.
Bank transfer schedule?
You got it.
Is that right?
H.
Okay.
He was a gentleman, let you take that one. H as in hotel. Yes. Very good. Number 3. Entities' cash receipts of the first few days of the subsequent year were properly deposited in its general operating account after year end. However, the auditor suspects the entity recorded the cash receipts on his books during the last day of the week under audit.
G?
Not G.
E?
Remember, some answers can appear more than once.
B?
B again. It's B again. Isn't that tricky? Because you figure once an answer is used, you can't use it. Letitia gets that one. Yeah, you got to you got to come up with something for us. Come on. All right, B again. B again. All right, number 4. But anyone's eligible. The auditor noticed a significant increase in the number of times that petty cash was reimbursed during the year, and suspects that the custodian is stealing from the petty cash fund.
F for 500.
Yes, F is correct. Yes, F as in 5 or Frank. Very good. 5, excuse me, 5. The auditor suspects a kiting scheme exists because an accounting department employee who can issue and record checks seems to be leading an unusually luxurious lifestyle.
Is it E?
E, yes, it's E as in echo. By the way, when I was at CBI Industries, we had a bowling team. And it was like a club. And the company contributed to it, and also people paid some dues, I guess, or something. The treasurer of that particular club was an employee who was part of my lunch group. And he had a fancy Camaro. So one month when he was short of funds, he took the proceeds that were meant for the bowling team and bowling club, and he used it to make his car payment, and unfortunately he could not recover the money in time, so he was actually found out, obviously fired, and I'm not sure if they prosecuted it or not. So these things can happen. Such a nice guy, but got in over his head, see? Number 6, during test of the reconciliation of the payroll bank account, the auditor notices that a check to an employee is significantly larger than other payroll checks.
D.
D, yes, D as in Delta, very good. Very good, everyone's contributed now. And number 7, the auditor suspects that the controller wrote several checks and recorded the cash disbursements just before year end, but did not mail the checks until after the first week of the subsequent year. E, yes, E as an echo, very good, very good. Well, that was fun. I enjoyed that. And again, you just put the letters down for the Dropbox. Okay, first of all, I got to get up a second here. And I'm going to let you read chapter 12 on your own. It's not going to be a testing chapter. So that might save one problem. Again, Bill's got to stabilize a second after sitting so long. Here are solutions to the problems just for your own benefit. You've been doing a great deal already with these good posts in the online discussion. So let's go right to chapter 13. Okay, good, good. Okay, let me get my Jones hard copy textbook.
So we're doing 27, 28, and 34. Right?
Yeah, we're going to go to 13. We'll get through this chapter. We'll see what if we can get caught up or something. You know, we talked about payroll a lot today, a lot of with Letitia's guidance so far. So we'll see. I'm not worried.
So we skipped 22C, right?
I'm sorry?
We skipped 22C.
Yes, because that was the audit, the bank reconciliation, and I already gave those notes from that old CPA question. So you don't have to, do not put 22C in the Dropbox if you were here today. I'm sure Amanda will probably put it in there because she wasn't here, and that's fine.
22C or 23C?
It was 23-22C, wasn't it?
Okay, yeah.
Yes.
Yeah, it was.
Sorry.
Okay, that was
Okay,
it.
so we don't have to do that one. Okay.
Right,
So
right.
we're only doing 2312, and with it's kiting and lapping, and how can it be protected in 2324?
Yeah, just,
Okay.
yeah, 2312 and 2324.
Okay, got it.
And 24 won't be much to type in. But you guys did real well on that, you know. No, the 22C, as long as you wrote down those notes from what I gave from that old CPA question, there's no reason to put it in the Dropbox. You've already got it in your notes or something anyway, so. If you want to put it in there, that's fine, but it's not necessary. Now, this was a foundation chapter that, again, I don't think we need to say a lot about it because we had some excellent posting in the online discussion here, where you talked about the substantive tests of transactions, the compliance tests of controls, the detailed tests of balances. And this is a good chapter for reading. There's no question about it, so I'm not vetoing it. I noticed Joan here spends quite a bit of, she has a lot highlighted here in this particular chapter. And they talk about designing the audit program. And some of you found some very interesting research that talked about designing an audit program. I want you to start looking, especially when we get to next week. They have some sample audit programs that might assist you. I was looking at a couple of them this morning. I just want to highlight you because you're going to be doing an audit program for the course project.
So that's what this is essentially.
Yeah, for example, the one I was looking at earlier today, because remember I got here sooner, and I, brought the post and everything up to date. Made some copies. Go to page 541. I know it's not as easy on ebook, sorry.
541.
Chapter 16, page 541.
I had a question about, I had such a hard time understanding exactly what part of it is the actual audit program.
That's what we're going to look
Okay.
at now, example of an audit program. And we're going to be seeing audit programs from now on, now that we're getting into these substantive topics. This was really the last of the foundation chapters. But yes. And you have those two examples, remember, from prior course projects. Go to page 541 in chapter 16, which will take a little doing when you have ebook.